So, David, you've got a really interesting background. One of my questions for you is tell me the journey. How did you actually get into crypto investing and Filecoin storage?
So my journey has been a little bit long in the field of finance. I did get my Series 6 and Series 7 license and began both trading and investing and advising clients. That didn't last very long, maybe a couple years, and then went to law school and decided in law school to go back into the service. So I became a Navy judge advocate, a prosecutor, and I prosecuted those cases for a period of time, about 3 or 4 years. I accepted a job after that with the U.S. Attorney's Office up in Seattle. So I worked there as a prosecutor, a federal prosecutor, for a few years, and then eventually moved back to San Francisco and started working for a big firm. Continued to do some of the same stuff, did some white collar work, some defense work, and then formed my own firm and became a litigator. It was probably about 20, I think it was before the 2016 election. It was
Mhm.
late 2015, early 2016, when I started to get involved in litigation involving cryptocurrency and mining, and questions as to whether or not certain mining practices or mining contracts constituted a contract of security under the federal security laws. Kind of started to dive in that way. And it just, for me, it became somewhat of a passion and a bit of a side, I wouldn't call it a side hustle. It was just more like a side hobby for a period of time, and really kind of dived into the cryptocurrency space and the digital asset space. And, I saw the rise of Bitcoin in 2017 and then the eventual fall, the rise of certain altcoin projects in the fall of them. And, the crypto winter, as people I think were calling it in 2018, actively trading Bitcoin when it was under 4,000 and that type of thing during that period of time. And that's really when I started to get into decentralized finance and really started taking off with DeFi products. Try to do it from both a retail investor and an institutional standpoint. The institutional, from my view, is a lot easier than the retail. But retail, I would say that with the DeFi summer that happened after that, once crypto space started to take off again and Bitcoin surpassed $20,000, the DeFi space really took off. And if I think a lot of us looked at the DeFi summer and said, well, is this something that's revolutionary, or is this just a bunch of greed where people are running from one liquidity pool to the next, trying to grab the highest 10,000% APY on some DeFi product? And it's hard to determine, but I guess history at some point probably will determine that. And
So,
since then we've been pretty involved in the space. Yeah.
we're going to do a little bit of definition of words so that everybody knows what we're talking about. When I think of an institutional investor, what's an example of an institutional investor in the DeFi world?
Yeah, for example, in the Filecoin community, there's a couple of funds that offer fill on a decentralized finance basis to institutions that have greater than $5 million of market capitalization, or can establish that they do.
So when I think about DeFi, I have started to divide you gave me these terms, which I really love, which is you have your DEX and your SEX.
Yes.
But
Yep.
SEX is with a C, not an S, and it just stands for centralized versus decentralized DeFi. And
Yeah.
so what we saw that caused the collapse of the crypto markets was centralized. Can you explain the differences, this central difference in how the funds are actually managed between the centralized and the decentralized that nobody seemed to understand, or if they understood it, think was important prior to February, I guess, is when this all happened.
And I think that the courts are still figuring it out. There's active litigation in the bankruptcy proceedings, and there's active, I think, discussion on whether or not certain claims are fraudulent in nature, whether or not certain claims should have been registered under the SEC or fell
Right.
within a certain exception. And I'll give you an example. There's an attorney I worked with in San Francisco on a lot of class action cases. His firm just filed a class action case against Solana, and they're claiming that Solana is a security.
But in terms of DeFi, I met the guys from Celsius. They showed up at a blockchain conference in Tampa. Very impressive. the smartest guys in the room easily, very technical. They had everything, obviously, and yet they made a mistake, a terrible error. And so did everybody who invested with them. That is an error that you probably could not make in a truly decentralized network, because behind the scenes, the investment was not being automated by software protocols. It was actually handled by people in the company. So I wanted you to sort of address that difference so that it's absolutely clear to anybody on this call that wants to fully understand the difference.
Sure, absolutely. There are a wide variety of different regulatory bodies within the United States that are responsible for overseeing the crypto space. It can range from anything from the Department of Justice to the IRS to the Commodity Futures Trading Commission to the SEC to, I believe there's even a financial criminal network task force that is responsible. But I think the bottom line is that there's a lot of agencies out there, but there's no one agency necessarily at this point that's acting as the point person. And there's been a lot of confusion over what actually constitutes a security within the context of either a digital asset or a cryptocurrency, because the definition of security was heavily muddied in the crypto space back in 2018 when I want to say he was the director of one of the divisions within the SEC, last name Hinman, I think first name Bill. He gave a speech, and during that speech, he made the claim that, and I believe they were talking about Ethereum at the time, that Ethereum was okay because in their view, it was sufficiently decentralized. And
Right.
since that time in 2018, the lawyers have looked at this sufficiently decentralized test or language to try to make a determination as to what actually constitutes a security in the digital asset space. And so everybody wonders, okay, well, I guess I can have a little bit of centralization, meaning there's a human in there making decisions, engaging in some type of control, acting as a central authority. You can have a little bit of that centralization sprinkled into your organization or to your platform,
Sure.
as long as they consider you sufficiently decentralized. And
So,
I'll tell you that that's a test that is going to be litigated forever if it ever becomes the true test. In
so
fact,
going away from these legal definitions, what I was really surprised about is that with Celsius and Voyager, they had their core team when they, paid you the 7% or whatever. They always said it was more, but the huge interest rates were always for the accredited investors and had these giant minimums as well. But even if you were, a measly retail investor, when you put you're getting 7% on whatever it was, I didn't realize that there were actual human beings that were reinvesting that money to try to clear those percentages that they had promised. And, I remember them actually saying in person, well, we don't have retail offices, we don't have real estate, we don't have middle management, we don't have employees. That's how we can afford it. But actually, they were making, sort of dangerous investments all over the place. And that's how they got caught. Well, another thing I never realized, many of these companies are promising these big interest rates, you have to use their wallet. So your money is now controlled by them. So if they make a bad investment or, go bankrupt, your money's basically gone. They can, they can freeze it. If they go bankrupt, you're behind the list of creditors. Sure, you can join the lawsuit, but so what? That's not what you invest for. So I didn't really realize that. So I thought, one of these things about it is Defi Dead. One of the questions is just taking aside the legal environment for a minute. I wonder, now that we sort of know if you have a centralized wallet, no keys, no coins has definitely panned out, that all the convenience factor that we were getting from these wallets did not help. So now you're like, okay, so we move. So it's like, all right, so now you move over to these decentralized DeFi pools where theoretically it's automated by software. Not that they don't have a core team, but the software is running the show. There's nobody theoretically in the back end that is saying, you know what, we don't like this algorithm. We're going to take 500 million and put it over here. So theoretically, they cannot do that. Is that in your understanding what this major difference is between the centralized where you sign up for their wallet and they hold the keys and somebody's, the Wizard of Oz is back there making financial decisions, and the software and the decentralized where you've got your wallet and there's a software on protocol that is automated the system. Is that your understanding of this major sort of difference?
Yeah, I mean, in terms of wallets, yes, I mean, the same thing applies, not your keys, not your coins type of thing. But there are a few guidelines that we have as an office for making trading or investment decisions into a DeFi protocol or a DeFi platform. The first one of those is that it cannot be through a centralized entity. We have to be able to use our own wallet for that, our own independent wallet, whether that be MetaMask or some other type of wallet. We do not get involved in the DeFi space with platforms that are centrally controlled by people that have the keys. And that is one of the reasons why we passed on Celsius many years ago. We were considering getting involved with it because they were offering some pretty darn good incentives. And
Yep.
we ended up passing on it because of the centralized nature of their business. And so we stuck with others. And it's that trade-off between you have a decentralized wallet. So yes, you're staking and potentially engaging in a borrowing and lending protocol with a pool of some kind. If something happens, there's really nobody you can go to say, well, hey, what's going on with this protocol? Why is it there a bug here? What's the issue? Or God forbid you get involved in a pool that has been flagged by the rug doctor and you get rugged and you lose your money because you've put it into something in which the code itself in the decentralized finance contract, the smart contract, is not very good. So yeah, one of our core tenets, at least in our home office, we don't do any DeFi work on centralized platforms, none whatsoever, because of
So
that very issue. It's no good. But you brought up a good point, Elisa, and that is, well, okay, even if you have your own wallet and you have a decentralized platform, what if there are issues, so to speak? And
sure.
like there was even, I think, a news report this morning, I think it was Compound, where Compound just suddenly told their users, hey, check in with us in 7 days because they're having an issue. And with being a centralized provider, you really can't do that. You can't, as an exchange, or you can't say, hey, we're not going to talk to you for 7 days, or come back and check your wallet in 7 days. So when you deal with code, I think you're dealing with additional issues in the decentralized field that are above and beyond a centralized provider. But for me, the biggest thing is, we've got to be able to control our funds, and getting involved in kind of what I would call a largely unregulated centralized provider in the crypto space is definitely not something that we would do as a home office.
Let's explore now. So we've decided we've got that bucket over here, centralized. Let's say we stay away from that. And so we decide that we want to hold crypto and we want to do something with it that's interesting. So there are these decentralized exchanges. And I guess, let's start by defining DeFi. So right now, we used to think of DeFi as the entire ecosystem, and I guess you can still use the word to define that. But I think for these purposes, we're saying that you're going to be able to earn something or borrow something or earn something. That's what we mean by DeFi in these terms. But if it's decentralized and there is a protocol automating this, and I think one of the things about a lot of the decentralized providers is that they require a certain amount of collateral from the lenders. So you put up 100% and then you can borrow 50. So if you whatever you're doing with your 50%, if you don't pay it back, they wipe out your 100%, and everybody in that pool is protected, and that all happens automatically. It's all executed by the software. So one of my questions that I asked you the other day is, I'm not a software auditor. So how do I know how good the software is, if there's any holes in it, if there's any escape routes, all that, because it's not regulated. But how do you know? I mean, even if it's something like Aave, which is decentralized, it has a DAO. Uniswap is a decentralized exchange, but they have a savings pool. How do you gauge the code? Is there any way to check?
Yeah, I'm not a dev. I'm not a person that, codes smart contracts or makes dApps or anything like that. But there is something that I have done, and that is try to look at just the structure of the contract and to be curious. Really, take a look at the code. It's going to look foreign at first, but there's certain things you can check. You can check, for example, one important thing that we always check is it a multi-signature wallet that's part of the contract, and whether or not it's just a single person that can come in and change everything or come in and alter the funds in some way. That's one thing we definitely check out. The other thing we check out is just in terms of the token distribution, if it has a governance token or if it has an underlying digital asset, what is the percentages of concentration? There was a DeFi protocol that we were considering one time a few years ago, where it turned out that 99% of the coins were concentrated, I think, in 6 or 7 wallets. And so obviously that was a huge concern for us, and we passed on it. So there are certain, I think, little things you can do to protect yourself. But I always, if you're a retail investor and trying to get involved in the DeFi space, I always say that the best resource is, it's called the Rug Doctor or rugdoc.io. And she is one that has provided a tremendous service to the DeFi space for the retail folks. She was a back-end developer, and she actually, looks at this code and she'll identify, certain projects and red flag them. If you have a project you're interested in, you can actually send it to her and she'll make a comment on it and say, hey, look, check out this portion of the code, or, this is no good for this particular reason, or be mindful of this line of code that's in there. And that's a real good way just to say, okay, this is a red flag. I'm going to stay away from this project. I'm not going to jump into this particular, liquidity pool or smart contract in any fashion.
We had a discussion about yield farming versus staking. I always thought of yield farming as sort of anything and everything you do to make money, and staking is you deposit and earn interest. But you're saying that's kind of morphed into a little bit of a different definition, at least the way that your group looks at it. So how would you define yield farming versus staking at this point?
There are protocols that just have, for staking, whether it be a single asset of some kind or some type of pool, or you have borrowing and lending protocols, and those are all defined in the smart contract itself. And realistically nowadays, and pretty much even during the midst of DeFi summer, almost everybody's gone towards a borrowing and lending protocol along with a staking protocol, so that people can deposit cryptocurrency and then, of course, withdraw it. So a simple staking protocol could be somebody going to a centralized provider, would be like BlockFi or something. I don't think they do business anymore in the US, but I'm not quite sure in terms of staking. But you can just stake an asset and you can achieve a yield based upon that. A lot of protocols would love for you to go stake your stable coins and earn, a percent or two, because it provides them with a level of liquidity. So you can just have a protocol that you stake and you earn whatever the advertised yield is on that. And then there are borrowing and lending protocols in which you can actually borrow and lend and then potentially yield farm if there's some type of farming token that they offer. That's the way I think Matic became so popular, is that its foundation or its nonprofit had gifted a bunch of Matic to Aave and to other platforms. And so they were able to engage in these very aggressive, staking, borrowing, and lending platforms in which you actually, if you participated, you actually ended up doing pretty well in making Matic and getting the Matic, based upon that. Same thing with the Uni token and some of the other projects that are out there, for sure. Yeah.
So it sort of starts with you're in a platform where there's borrowing and lending going on.
Yes.
and the transactions are paid in the native coin. And then there are some rewards for holding the native coin. And then other people might be collateralizing, borrowing, and then doing something with the native coin or something else to try to leverage those returns. And that's kind of where it gets really interesting in terms of the amount of money that can be made. And given we've addressed some of the risks, can you give an example? Because I know that's where, these funds that are promising 1,000% or whatever, they're all trying to do this. And I've heard lots of stories, but can you give a concrete example of how that might work? Where you are staking, you're borrowing, or you're earning native rewards, and then you're investing in something and somehow you're compounding your earnings on that?
Yeah, so I'll give a somewhat straightforward retail example where you
Okay,
could take
perfect.
like 5,000 USDC, you can deposit it onto the Aave platform. You can then take a certain percent of that and borrow it. And now at the same time that you're lending and borrowing to yourself, you can look at the competing interest rates on both sides of the deal, and you can determine actually, are you going to make money lending it to yourself? And a lot of people end up doing that in the protocols, and that was something that people would look for, that if they were to then borrow and lend, even though they're paying an interest rate on the borrowing, are they actually doing better because of the farming token incentive that's being offered? Obviously, the danger of that is that those farming tokens are heavily dumped and they're subjected to a lot of pump and dump type of schemes. So, actively when you're involved in the protocol, people could be dumping those tokens on you, which can be challenging and difficult. But yeah, that's one, just I would call a straightforward example, and it can be taken to the extreme where you can deposit 5,000 USDC, borrow a certain percentage, take that percentage, redeposit that percentage, and get yourself involved in a loop where you're just sitting there collecting Matic tokens all day long. And people were doing that and doing pretty well for a period of time.
Yeah, it's hard to know. When I talk to some people who are doing it, it's like if they've gotten their investment out and they're earning income and they can get their income out, I'm like, okay, so what, right? As long as they're not, sort of building this pyramid that can come crashing down. So let's talk a little bit, and then I promise I will turn this over. When you're talking about yield farming, two different strategies. One of them is you are in a dual liquidity pool where you have two coins and you put them into a pool and there's interest there. What are the risks involved, and how would you lower those risks?
Yeah, so if we got involved in whether it be a dual or they even have like 3 crypto staking type of pools, our criteria is pretty straightforward. If we do that, we'll only stake in pools that have 2 assets, and we try to do our best to have one of those assets be a stable coin. The reasoning for that is that there is the risk of impermanent loss. And what can end up happening is that if one of the particular assets goes down too much, you have the other one being sold to take care of that one, and then it just starts getting involved in a crazy loop. And oftentimes you'll end up hitting your impermanent loss at that point. So that's the real danger. I mean, the real danger is you could be technically right on your theory of investment, but at the end of the day, get liquidated because one of those assets has a bad day in the market.
And so you would want one to be a stable coin, but you would not want to match a stable coin with an exotic.
It depends. Like my favorite one that I used to do was USDC and DAI. I love that. It was
Okay.
easy. It was straightforward.
So you want coins that are very similar in value. So, DAI and, two stable coins are very similar. So they're not going to vary very much. And so therefore the risk of impermanent loss is going to be lower, right?
Much lower.
Rather than if you have two assets that are going to vary widely, you have an additional risk. And I guess the last thing I wanted to ask you, you have, I told everybody here that your fund is friends and family. You do have projects that you'll look for investors, but in terms of your DeFi fund, that's just what it's your personal private fund. So what I just want to say is David's not here to pitch you to invest in
No,
anything when he gives his advice. He can still be wrong. He could be dead wrong. And we're here to give you information, not financial advice, of course, as always in the disclaimer. But I have to ask, what do you find interesting, and what is your fund, your friends and family fund, doing? What are you up to?
yeah, it's a tough one because it's been asked, I think, for some time, is DeFi dead? Are we going to see a kind of a big shift in the community? But where we're putting, I think, our focus and our effort, our time and our money is into the Web3 projects in which they're actually still seeing, I think, a lot of building. So we're looking at a lot of Web3 infrastructure type of products. We're big fans, of course, of Filecoin. I mean, that's just one thing that we love. We think there's a big future for Filecoin and IPFS. We're also really into the graph. I'm huge into the graph protocol. I think that that's got a good future ahead of it for sure. I do like some of the other infrastructure and storage projects. I do like storage. It's smaller, but it's something that's available. But most of what I would call some of the top 10, top 20 cryptocurrencies, pretty overvalued right now. We're waiting to see, what's going to happen in the market in the next 6 months for sure.
You flagged Filecoin in the graph. I want to turn this over so everybody else has a chance to ask questions. Feel free to ask questions about those projects. So I'm just going to throw it open. And if you've not introduced yourself, please do. We would all like to know you. We're kind of a little family over here. We, after a while, we sort of know each other a little bit. So yeah, throw out any questions.
Hi, this is Charlene. How you doing, guys?
Good.
Hello.
Good. Welcome.
Hi.
Thank you very much. Yeah, my question is, what do you guys think about the whole XRP, XLM, XBC, that kind of stuff in regards to DeFi? I mean, I pretty much associate those protocols with DeFi, but I didn't hear you touch on that. Just really kind of wanted to get your take real quick. Thanks.
Yeah, no worries. I mean, I'm a huge Ripple fan, and I was sad to see what happened with their beef with the SEC. Unfortunately, because we're a U.S.-based business, we do have to shy away from XRP type of any type of decentralized finance or any work involving them.
I've just recently joined this group, so I've got a couple of questions for you. My background is mostly in finance. I've worked at large financial institutions. I'm involved in some startups now. But one of the things that strikes me out of the DeFi movement, not enough people are talking about what I would say a very detailed end-to-end process on managing every aspect. So payment, potentially custody, settlement, what's the fail safe. There's a lot of institutions in the legacy finance system that have evolved as a way to deal with problems that arise. I think it's amusing how people get bent out of shape in the crypto space. I think they just don't understand how the actual system works to date. And I'm conceptually behind where this is headed, but I'm just curious if you're seeing much movement there, because I haven't seen a lot of good thinking on some of the hard problems, like just when you close out a margin call, for example. I mean, the legacy system will bend the rules a little bit if they think that a certain entity going down is going to ripple through the whole system. I've heard people say, well, some of the smart contracting capability is going to resolve that problem, but you may end up with a curse because the system's so rigid that in times of struggle, the whole system crashes. Just curious to get your perspective on companies or capabilities that you see developing in that space.
Yeah, and I think that's going to even address a larger issue in terms of you've got the user experience for retail, but you've also got the user experience for the institutions as well, because these guys are not, as are not used to all of a sudden turning on their computer and seeing that they're liquidated. That's not what happens in that space. You could get a call from your broker, maybe you're a couple of days past the margin call and they'll still keep you open. That's the curse of a smart contract, is that if it's coded, you will be liquidated. And if you reach a certain level, your deposit doesn't meet what, you've withdrawn and you've lost value in some of those assets, it can really, it can go downhill pretty fast, and then the contract can kick in. So yeah, that is an issue. And it's, how do we move forward in the DeFi space with both the retail and the institutions in mind? Is there any leeway that can be had? It's kind of like we want our cake to eat and eat it too type of thing. We want to be decentralized, and we love, the fact that be your own bank and stuff like that. But again, if there's a problem or if there's a margin issue, don't just turn me off. Don't just, take my money away. Give me an opportunity type of thing. Because in any margin call in centralized land, we can deposit more funds. There's no problem with that. In the DeFi protocol, if you're not doing it right, they're just going to liquidate you, and it could be while you're asleep at 2 o'clock in the morning, unfortunately. So yeah, that's the curse. And I really hope as we keep going that we can address some of that kind of stuff, that maybe we do need a little bit of centralization sprinkled in to handle some of these concerns. But these are all active debates, I think, as we continue to build through this crypto winter, for sure.
Matt Rain weighed in with pick and shovel plays, and I don't know what that is.
Definitely. I think, Matt, you're probably talking about like infrastructure type of play. It's like, okay, who's going to keep working during this bear market period of time? I'm anticipating that that's where you're coming from with it, and that's how we look at it. We're looking at who's building Web3.
Yeah, I just made the comment when you were talking about those kinds of thoughts. I was just thinking with my fingers. But the question I asked earlier in the hour had to do with a reference you made to an SEC memo. I just wondered if you could share your kind of personal summary of that. Like, how do you file that whole thing? What do the SEC say in there to your way of thinking?
Yeah, so the memo itself, if you want to take a look at it, it's dated, I believe, November 9th of 2021, and it was by one of the SEC commissioners, and I forget her name, is escaping me, but it's a relatively detailed article and memorandum on the future of DeFi and how they view things. And I would just describe the memo as enforcement is coming. That's the way that I view the memo. Enforcement is coming, but we're not going to tell you how, why, when, or under what circumstances, but it's coming.
And it did say directly that they considered Ethereum as a security. Is that the same memo?
Yeah, I think that they painted the cryptocurrency field and digital asset space in a broad brush there, for sure.
So they can jump in at any time.
Pretty much. When it's just so murky right now. I think that nobody really knows what's going on, and we don't have an SEC that's giving us a lot of guidance. And to me, the SEC just seems to be fighting amongst themselves, and it's, I don't know where it's going to end up, but they seem to like to file litigation before actually talking to folks, and I don't like that at all.
I'd like to ask one more question about the timing, and forgive me if you covered this before I jumped on. I was a few minutes late joining. What do you think the timing of a DeFi, digital economic asset-based system is? And the reason I'm asking this is I'm often surprised that people seem to think it's like 2025, 2030, and yet last week, they announced, I think, that they're taking out the 20-pound note and 50-pound notes out of circulation, no longer going to be able to be taken as currency. And that's like our 20 and 50, right? And that's effective September 30th. I mean, that's super fast.
Yeah.
I'm really of the opinion something's probably going to happen, whether it's a black swan or whatnot this year or early next. But I feel like there's going to be some driver. I think they've already planned for it, but I think it's still going to be perceived as a black swan. And I'm appreciative to kind of get your take on the matter.
Yeah, I do tend to agree with you. In terms of a digital economy, China is already there. You don't really handle cash in China. And the central bank here is planning a central bank digital currency, which is going to put them into a dangerous land because, our Federal Reserve is not elected, or it's not, they're technically private. And so they want to create a central bank digital currency. And I can think of almost nothing good right now that can come from that, given our nature of our Constitution in the US. But I do think if it's going to be imposed, it's probably going to be imposed upon our society, similar to the way COVID, that there's going to be an emergency and they're going to then normalize it, basically. Yeah.
I'm kind of hoping that we can avoid the whole CBDC future as well and keep bankers to a minimum in terms of what they're functioning as, and keep things more peer-to-peer, obviously, centralized peer-to-peer in terms of movement of value across this new system. But in terms of timing, are you thinking still like it's sooner than later? I guess that's really what I'm asking.
I would say I would be very surprised if we hit 2024 to 2025 and they have not tried to do the hook shot of getting it into the basket with a CBDC. I think it's going to come sooner rather than later. And the market right now is very difficult. And I do think that we are in danger of a black swan event in light of where the market exists and the valuations in our equities.
Just the liquidity. I mean, I feel like there's going to be a sudden liquidity problem that will be driven by whatever, right? World event. And then that'll be our segue, right?
Yes, unfortunately. I was actively trading in early 2020, before COVID. Early 2020, I was actively trading the S&P. The S&P had achieved 3,000, which was like a, wow, that's amazing. And the valuations were very lofty at that point. Well, in COVID, it went up to 4,800 and we're still above 3,000. So we're still way above where we were even pre-COVID, which doesn't make much sense unless you've pumped the system with money.
Yeah, I mean, the Fed is not, the thing is, people talk a lot about interest rates. It's unwinding their balance sheet that is going to be the kicker. But I just, having been in some of those conversations, CBDCs are coming, unfortunately. I mean, and we're not having the proper debate, in my opinion, because we're not, because we're sacrificing privacy for some very tenuous objectives around managing some aspects of the black market, but also theoretically gathering data on everybody's behavior. But that can be used for a lot of nefarious purposes. And unfortunately, I think we're going to probably end up like China, where you just don't have, there is no privacy.
I am going to officially end this part of the meeting and start the cocktail hour, where we're going to talk about whatever we want to talk about. CBDC. Let's start there. Obviously, you guys all have a lot of opinions. I want to know what I thought that the government was just sort of trying to get in the crypto game, like all the governments are. What's terrible about it? Obviously, you guys see it as Chinese and sinister. I've asked this question about Web3 protocols where, you're reselling your data to a third party, but everything you do is tracked and for sale. I don't know how that can be safe either, even though it's decentralized, but a lot of people in the crypto space disagree with me. It's not like China at all. So, explain it to me.
I'll let folks jump in if they want to.
Anybody can jump in.
I mean, my take is it will happen at some point, and it will be under circumstances in which we'll have to agree to it as Americans. But we have a fundamentally different, I think, system here. And I think our Constitution kind of gives us that right to be left alone and have some basic version of privacy. It's a debate we should have, and we're not. Yeah.
Okay, so give me the digital currency. I'm assuming that's what we're talking about here first. What is the problem with a government having a digital currency that is different from this fiat currency, which they already control?
Yeah, I just don't want, the Federal Reserve or the Department of Treasury to know, exactly where every dollar I put is going, and also give them the ability to manage that. I don't like centralized authorities, period, like that. And I would view the central bank as just another centralized authority. And I think that the scary thing is, again,
the ability to track every transaction
and control, to be able to say, well, okay, you can't spend your money on this. It runs kind of contrary to, I think, some of the tenets of our society, or the tenets of democracy, for sure.
Okay, that makes sense.
My take real quick on that is just what everyone's concerned about is programmable money, right? You've had too much meat. You no longer can use your money for meat. You basically didn't get the latest vaccines, that kind of thing, right? And
right.
you can't go outside your 1 mile radius of your home. The China, the CCP type of program control is, I think, where the concern is, though, just to clarify.
Yeah, I was going to say, CBDC is a tool, just depends on how it's deployed. I think that, that's the issue. But I mean, if you get to the conceptual foundations, The Chinese have a different value system, which, we can argue about it's better or worse, where it's okay to hurt innocent people to protect the group. And the US, I don't know that this is still true, but we had this Jeffersonian ideal that we'd rather, let 9 guilty men go free than put 1 innocent person in jail. And so I think that that's really the question. I just don't think we have enough debate about it. I mean, to some extent, this has already happened. I mean, with respect to the way we use credit scores. I mean, I didn't vote for that. I actually reviewed some of those models. I mean, I'm actually a quantitative finance guy. Those models aren't that good. There are a lot of people whose lives are completely turned upside down because there's a problem with their FICO score. And I've had some minor issues, and trying to get it fixed, it is not easy. And that could mean you can't get a mortgage. You can't, now employers are using FICO scores to screen their applicants. I mean, to some extent, this is starting to happen in the US, and I'm amazed we just aren't hearing more about it. I mean, we're too focused on all these other problems. So, but we've already ceded a lot of our privacy in a way that I'm not comfortable with, but, not enough people seem to care about it. At least when obviously this group is a selected group, but I bring this up and people are like, oh, you're paranoid. It's like, I've seen the back end of how this works, and Experian got hacked, and, I periodically get my credit card numbers stolen as a consequence of that hack, and I think some executives should have gone to jail, and nothing happened really. There was a lawsuit, and they were going to give you $25 or 6 months free for their credit review service. I mean, it's absurd.
Yeah, it really is.
I think that the CBDC, I mean, there's a lot of value. I mean, one value for CBDC is kind of the same value you get with a debit card or credit card, and that is you can do very small transactions. But you can do that with Venmo. You can do that with Zelle. Yeah, I think we haven't really talked much, I don't think, as a society, the levers of power, like what this means. It's just kind of things run along with its own inertia. I mean, that's my issue.
Yeah, and I think the lack of discussion gives us decisions at a governmental or a leadership level that don't understand the technology, similar to the Tornado Cash, debacle with the sanctions. I truly think whoever drafted that up didn't have a clue as to really what a smart contract was, or what, any type of platform like that or protocol like that was. And so you get problems. Instead of having discussions, you get what a lot of people have coined kind of enforcement by litigation. And that's no way to do business. And it's no good for members of our society that need privacy. Yeah, no doubt about that. I mean, I do understand. I've seen the wisdom of the Chinese central bank digital currency, and the ease in which their society uses that. And it seems like, hey, if you have a user experience, that's a great thing. But the real question is, what are the drawbacks, and are we discussing them enough? And so far we have not. It's just been this weird concept that's been floated, and the society doesn't truly understand it, I don't think.
No, I love this conversation, and I want to emphasize that I'm not an expert here. I'm a student, but it does strike me that when I stumble into conversations about this topic, there's frequently an impulse to compare a future where we don't have a CBDC to the past. And we think about all the risks that basically would come with the US government doing this thing compared to the ways things have always been. And I think that kind of makes sense. But it strikes me that the US is also looking forward and imagining there are horses that are now out of the barn, and we'll never have things the way they used to be. The Federal Reserve, the value of the dollar and the global markets, blah, 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 all that's going away. And so it seems to me that, this kind of debate that we should be having, as you guys say, I love the way you put it, has to take that into account too, that to some extent, the US has to figure out what they want to protect and what's on some level legitimate to protect from the standpoint of international finance and geopolitical leverage, blah, blah, all that crazy stuff. And I think that makes it a more complicated conversation, but I think we'd be remiss not to weave all that in.
And it's funny you say that. Back in 2020, so 2 years ago, Forbes actually ran an article called "Is DeFi Dead?" And their ultimate conclusion was it's not, because the cat's already out of the bag. There's nothing you can do to really stop this train at this point. And I do believe that to be the case. And unless we can figure this out, I think we're going to have some issues and problems in our society, because we are a different society than, some of the other countries in the world.
Yeah, for me, one of the easiest moments of insight was the first time I heard someone say, imagine Russia and countries like Russia and Iran looking at the sanctions that have been placed on them and imagining how basically they can just completely step aside from all that in a world where, just to be silly here, Bitcoin is now a way to get stuff done. It takes all geopolitical leverage off the table. And as soon as you start pulling on that kind of logical thread, it just seems to me that there are a lot of fun thoughts that spill out of that. And I can imagine it scaring the bejesus out of forces in the government that in some ways might be legitimate.
I believe the United States government will heavily protect the United States dollar as the world's reserve currency. And I think that they're not going to let that go very easy.
Yeah, exactly that.
And that's really the forces that we're dealing with right now. We're dealing with liquidity issues.
Yep. And we've never stepped into like a chapter where really that was quite on the table the way it is now. Like we're not well practiced in having that conversation. Again, kind of riffing on your metaphor, for better and for worse.
That's true. And I just hope that, it doesn't result in some type of civil unrest at some point. That's my hope, is that we were able to avoid that. And I'm not calling for financial doom or some dystopian society or anything like that. I just think that we have a lot of issues we have to contend with, in light of the trillions that we've printed over the past few years in both administrations. So I'm not trying to make it a political thing at all.
Absolutely. Yep. Yeah. I mean, I think sometimes we don't realize what duct tape and chewing gum is holding everything together. Yeah. And we might be about to find out.
Yeah, I think the Federal Reserve is spinning plates on those little sticks, and they've got a lot of those plates spinning right now, for sure.
Yeah.
On a positive note, I actually jumped into one of these debates on, I can't remember what platform, Bloomberg or something. One of the things that's so interesting about this moment in history financially, it's almost like the weather system. There's like so many things happening at once. So where my head exploded was somebody was like, well, when we look at the last 3 recessions or blah, 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 I'm like, no, there's a lot going on. There's just a lot going on that, you can't look at the past and plan for the future, because there's sort of many things in play. I'm inherently distrustful of anybody tracking information, including Facebook. Google, I have to say, I give a free pass, because we need the freedom to search. And that's a vital freedom of information thing that Facebook doesn't actually provide. I mean, I love Facebook. I use it to connect with distant friends, but I basically don't go on it anymore. I'm a little worried about what it's doing. Twitter is just a fabulous source of news, but your phone is tracking you. Your car has black ops in it, as one of our members said. So we have a lot of things that are tracking us that we've agreed to for the convenience that it provides us. So we're already in this world. Oh, and by the way, we all have cameras on our houses, so that when we walk down the street, not only our camera, but your neighbor's camera is tracking everything that you do. It's decentralized, not centralized like it is in China, but London has a TV show. I don't know if any one of you has seen it. It's like not LA Law, but I don't know, FBI, or it's like one of these reality shows. It's based on their cameras that they have everywhere in London on the street. And it's like how this person sitting in a room that's recorded this information and communicating it back to the police. And it's everywhere in London. So, this stuff is happening. And I think where I come from with it is, it's like it's sort of already there. And you mentioned your credit score. Of course, There's problems with that. I mean, there's all sorts of things, all sorts of information everybody has on you, like it or not. If you want to live a life, you're going to put out a lot of information. You know, I don't do Facebook anymore. I don't put out a lot of Twitter. I indulged myself and did a post on, you know, a media site. Part of the overlapping issue here is we live in a free society where we have historical democracy with most people who believe in democracy, but it's challenged. It's being challenged today. I don't know your political persuasions, but some people think it's being challenged by the left. Some people it's being challenged by the right. I will say, I think it's being challenged by people that want us to have an authoritarian government and they think it would be better for them. So you have to worry. If you really thought we'd have a democracy forever, we're like, who cares? We'll never be China. But I've seen the world change so much. You know, I can't go to Russia anymore. I was in Russia painting oil paintings a few years ago, and I can't go back. I mean, but even when I was there, I showed up with my little oil painting. The police showed up to make sure that I was an actual painter at a Catholic Orthodox monastery where I had to wear a scarf on my head, over my head, like I was a Muslim woman. And I was in, you know, Cerulean Forest, and, you know, in Russia. And I remember when I was in school, like, you know, I could go to Iran, go to the Middle East. I think there's this overlap with this idea of authoritarianism that's disturbing. You know, we don't really know where this is heading. And then because of that, I think it's harder to embrace all this technology, but it's already here. So I don't know. You know, I think the currency, to me, that's like the least of our worries, but I get it. It's like, yeah, they can track every expenditure, but some companies are already tracking every expenditure. What if we get some administration where they decide to put all of it into central government database? That's my, I don't think it's completely about technology. I think it's a little bit about politics. And then I've said my piece.
I know DeFi promised utopia. I'm just waiting for it to come. You know, DeFi promised that I could be my own bank. I could deposit my funds. I could get yield. I could withdraw my funds to a certain extent and use them, and do that reasonably. And I think we still can at some point. It's just, how do we get there? And
well, and there's sort of a promise too of disrupting corporate organizations. So, you know, if you're Uber, the guy that's going to speak Wednesday, he's not the founder, but he's like the top sales guy for Alley One, I think. But they're trying to disrupt the delivery service space where 100% of the money goes to the drivers. So, you know, there's this sort of wonderful possibility, but it's still a possibility.
oh, it is. Yeah, I think to answer the question, is DeFi dead? I don't think so. I think that what's happening is just like, you know, early 2018, we're seeing the real projects. They're doing the real building and getting the real funding streams. They're surviving and they're doing fine. And I think people see the wisdom of these Web3 products. I think that, you know, it's just a time to focus in on what matters in the crypto space, because there will be a lot of projects that will fail during this period of time, and not necessarily failed so much for merit as it is for liquidity. I still think that we can make DeFi into something that is good for institutions, for retail investors, for anybody that wants to get involved in that and wants to be their own bank. I think that the ideals are there, and it's just, again, how do we get there? I think, you know, Jeffrey may have mentioned that about we're not having the discussion, and we're just not, unfortunately. Yeah, but we're having it here, which is good. Hopefully we can shape society a little bit.
I'm actually gonna have to sign off, but Elisa, one more comment. I actually don't think this is about currencies per se. It's about privacy generally. And I think it started with the Patriot Act actually after 9/11. I mean, that was the beginning of the end. If you want to talk about, because that's where, you know, warrantless searches, there's a lot of things that have changed in the last 20 years that I don't think we've had the proper debate. And CBDC is just the latest in that string. It's just, there's a lot, you know, I think a lot of these issues don't percolate up in the media often enough, but I mean, the IRS has too much power, for example. I mean, they can go and freeze your assets with very little cause, and they don't seem to be subject to habeas corpus. So, they can just indefinitely freeze your assets. I don't see many people talking about that. I mean, if you bring it up, they think you're some kind of crazy anti-tax person, and it's not the point. I mean, my issue is it's about process. We've lost this focus, I think, on respecting the process and rule of law. And it's just like whoever's in power and whatever their ends are. And then privacy goes by the wayside in the process.
Brick by brick. Yep. Sure does. Yeah.
I love the DeFi, kind of slogans and philosophy, but I just don't think I find a lot of the tech people I talk to, I mean, I live in San Francisco, they just don't understand finance. I worked 35 years in institutional finance. There's a big gulf. I mean, I think you have a much more insight that in this context, at least when I hear these conversations, than other people in this space. And we need more of a linkage, because there's a lot of people in the legacy finance system that don't like it either. It's just that, they don't know exactly how best to change it. And there are better tools in the tech community. They're just not well put together. That's why I was asking about end-to-end process.
Yeah. Yeah, and my hope is that with the DeFi space, end-to-end process can just exist in my own wallet, whether it be a cold storage wallet or a hot wallet. It's mine, and that's
And all I just want the government to define the rules of the game and then leave us alone.
Amen.
Yeah.
Amen to that.
Yes.
I mean, we really thought in 2018, the lawyer community, that this sufficiently decentralized test was going to be a real thing, and we were going to get some guidance, and we didn't. Everybody just kind of went blah after that. So, we're still here 4 years later trying to figure it out. It's sad.
Okay, so listen, I want to thank you. I think we got a theme together.
I'm so sorry, Lisa. Can I just say one thing? I don't want to forget the person that asked about the Solana lawsuit. So, the case is Young. First name is Mark Young. It's a class case, so it's Mark Young on behalf of himself and everybody else in the world. And it's against Solana Labs. If you want to check out the case number on Pacer or just with a Google search, the case number is CV03912, and it's just here in the Northern District of California in San Francisco. And that's against Solana Labs, Solana Foundation, as well as some other folks. Looks like a capital group that backed them, Multicoin, and some individuals. So yeah, it's an active litigation right now. We'll see what comes of it. We'll see if some judge says Solana is a security. That'd be interesting.
Well, thank you. You've answered everybody's questions, and I think the dream of a international digital currency free of government interference is alive and well, which was Bitcoin's, original idea, which has not ever quite happened, but we'll see. Thank you to everybody for showing up and participating. I know your time is valuable, and this was really interesting for everybody. And thank you for all your contributions. And good night. And I hope we will see everybody again.
Okay. All right,
Okay.
guys. We'll see you later.
Okay.
Bye-bye.
Bye.
Bye.